They told you debt was opportunity, that credit meant freedom, that borrowing was a sign of trust. But in 2025, debt isn't a side effect of the system. It is the system. Every swipe, every pay later, every 30-year signature feeds a machine built to rent your future, one paycheck at a time. We grow up believing choices define us. House or apartment, new or used, college or career. But every option comes pre-packaged with a financing plan. Debt is baked into adulthood itself, a rite of passage disguised as personal choice. Open a credit card at 18, student loans by 19, auto loan at 23, mortgage by 30. Each line of credit is a leash that looks like a ladder. The system never needed to force obedience. It just made debt feel like progress. Every modern dollar is born as someone's debt. Banks lend it into existence. Governments borrow it to spend. Corporations roll it over forever. Your paycheck settles last month's interest, then disappears into new monthly bills. That's not broken. It's design. In a credit-based economy, stability requires growth, and growth requires borrowing. If borrowing slows, everything stops. Profits, GDP, elections, stock prices. So the architects of money learned a truth centuries ago: keep the population borrowing, and the machine never sleep. Debt is sold as a product, but interest is the product. A $300,000 mortgage at 6% means you buy your home twice, once for you, once for the lender. Credit cards promise convenience, but their secret language, minimum payment, was tested by behavioral scientists to maximize interest revenue. Make the minimum and you'll owe forever. That's not a bug, it's the business model. Banks discovered the perfect customer isn't the one who defaults, it's the one who never finishes paying. The modern twist came with gamification. FICO scores, credit apps, reward dashboards. Spend more, your score goes up. Pay off everything, it might go down. Financial obedience rebranded as a game. You aren't judged on wealth or savings, only on how reliably you feed the system. Even your job prospects and insurance rates depend on those three glowing numbers. The algorithm doesn't ask if you're responsible, only if you're profitable. After the 2020s boom in buy now, pay later, credit became invisible. Every checkout button split into 4 easy payments. You could finance groceries, shoes, even lunch. AI underwriters profile you in milliseconds, not just by income but by behavior, typing speed, browsing habits. They predict how much debt you can tolerate without breaking. The goal isn't to free you from credit, it's to perfect your relationship with it. Marketers learned long ago, shame stops spending, pride fuels it. So they reframed borrowing. Treat yourself, you deserve it. You're investing in your future. Debt became self-care. Credit turned into confidence. Behind every slogan sits a spreadsheet calculating lifetime yield per customer. They don't sell products, they sell behavioral predictability. A degree defines intelligence, financed by loans. A home defines stability, financed by mortgages. A car defines success, financed again. The culture measures adulthood in liabilities. Each step forward comes with paperwork that drags behind you like a chain. And when someone pays cash or refuses credit, the system labels them suspicious. Because freedom doesn't generate fees. The global economy runs on your willingness to owe. When households borrow, spending rises. GDP looks strong. Markets cheer. When households pay down debt, growth stalls. Politicians panic. That's why every downturn brings lower interest rates, stimulus checks, and new programs to encourage borrowing again. Economic recovery means borrow more. It's a pyramid that only stands while new entrants climb underneath. Inflation is debt's silent partner. It punishes savers, rewards borrowers, and ensures yesterday's debt costs less in tomorrow's money. But prices rise faster than wages, forcing people back to credit just to stay even. It's the perfect loop. Debt creates inflation. Inflation creates more debt. Everyone falls behind, except the issuers of both money and credit. Corporations borrow too, but their debt buys power. Cheap credit funds stock buybacks that inflate share prices. Executives cash bonuses. Workers see stagnant pay. When rates rise, they issue new bonds. They never intend to be debt-free, only debt-serviced. You can't do that because your debt is collateralized by time. Theirs is collateralized by influence. Subscriptions are the new debt. Streaming, cloud storage, gym memberships, software, all micro-contracts that drain cash flow invisibly. They blur the line between ownership and rental until everything feels temporary. You don't buy movies, you lease access. You don't own software, you rent permission. Even cars now come with financed features that unlock through monthly payments. You're not trapped because you borrowed too much. You're trapped because everything is designed to be borrowed. As finance merges with technology, debt becomes data. Every transaction feeds your profile. AI lenders adjust interest in real time, pricing your obedience like an insurance premium. The more predictable your spending, the cheaper your credit, until unpredictability itself becomes a penalty. Freedom costs extra. Debt isn't just financial, it's emotional leverage. Stress makes consumers impulsive. Exhaustion lowers resistance. That's why paydays, holidays, and even heartbreaks trigger targeted ads for credit offers. The system monetizes mood swings. Algorithms know when you'll click accept offer before you do. Each generation inherits the liabilities of the last. Boomers leveraged cheap credit and rising assets. Millennials borrowed for inflated degrees. Gen Z rents everything digital and physical. Debt isn't passing down, it's compounding. By 2050, analysts project private sector debt could triple again, and personal savings will barely dent it. A civilization built on IOUs can't retire, it can only refinance. Congratulations, your limit has increased. That line feels like progress, but it's permission to sink deeper. We celebrate new ceilings the way past generations celebrated pay raises. Dependence is sold as empowerment. The cage expands, and we call it freedom. Once, a banker decided your worth. Now an algorithm does, trained on decades of bias. It doesn't care who you are, it cares how your cluster behaves. If your demographic defaults 2% more often, your rate goes up automatically. You'll never meet the decision maker because the decision is math. Escaping the debt trap isn't about living off grid, it's about seeing the grid for what it is. First rule, delay gratification, because the system profits from impatience. Second, build assets that pay you, skills, tools, ownership. Third, redefine success, not what you buy, but what you own outright. When you stop chasing financed status, you start compounding freedom. If society accepts every financial upgrade, tomorrow's control won't need enforcement. AI credit scoring, programmable money, digital IDs, together they form a perfect feedback loop. Spend as directed, earn permission to keep spending. The system won't collapse, it will optimize. And most people will thank it for the convenience. But cracks are forming. Communities experimenting with cooperative finance, crypto alternatives, mutual aid networks, people learning the old skills of ownership. They're small, messy, human, everything the algorithm can't model. Freedom starts where predictability ends. Debt built our world, roads, schools, skyscrapers. But somewhere along the way, we started building ourselves out of debt and debt out of us. The system doesn't need chains, it only needs habits. And it has billions of them. Auto-pay, direct deposit, accept terms. Maybe the real rebellion isn't refusing to borrow. Maybe it's refusing to believe that borrowing is freedom.